Hey guys, Dave Hathaway on another deal day where each week we look at a new property in a new market to determine if it makes sense as an investment. This helps us build repetition, discover new markets, and become better investors. So this week we're actually going to look at Kansas City, Missouri. And interesting enough, I actually did not know this, but Kansas City sits on the border of Kansas and Missouri. So throw a comment if you think that Kansas City should be reviewed as Kansas City, Kansas, or it should be reviewed as Kansas City, Missouri. I chose Missouri because I don't know any better. But Kansas City is home to the Kansas City Chiefs and the Kansas City Royals. And the address we're looking at today is 2237 East 69th Street, Kansas City, Missouri, 64132. And we always like to look at the market before we look at the property to make sure it's a viable market. And for Kansas City, it has a population of 1,725,000, and it's increased 0.82% over the last year. And you can see that it's just been steadily growing, which is a great sign. For job growth, it's grown 1.8%, which is great. Its unemployment rate is 3.2%, which is less than the national average of 3.6. The average salary in Kansas City is $42,000 a year, which is great. And the median home sales price is $260,000, 2.2% year over year. This is just a healthy market. I give this a thumbs up. Everything there shows green flags. This is a great market to invest in. Moving on, we go to the Google Street View test. And when you look at this neighborhood, you probably go, wow, those are some really mature trees, which I love, and they add value. It's got great sidewalks. If you look at the properties, they have great architecture, which is nice. It just gives you that feeling like you want to live there, a nice neighborhood feel. And this is the feeling you want people to think when they look at the Google Street Views or your listing photos. When they come into the neighborhood, you want them to think, hey, I want to live there. I can picture myself living there. So the Google Street View test passes with flying colors as well. Before we move into listing details, guys, if you find this content valuable, I'd love if you subscribe to the channel, like the video. It does us a huge service to reach more investors like you looking to reach financial freedom. So thank you for liking and subscribing to the channel. Moving along to the listing. So this property is listed at $140,000. It's a single family home. It's a 3-bedroom, 2-bath. It has 1,167 square feet, and it was built in 1926. When you look at the pictures of the listing, my rehab suggestion would be get rid of those 2 box bushes out front, redo the landscape a little, give it a nice appeal. When you go into the interior of the house, I'd get rid of the popcorn ceiling. Nobody likes it. It looks like there's a decent amount of drywall work that needs to be taken care of. I don't know if you can salvage the hardwood floors because they look in rough shape, but if you can, I would refinish hardwood floors and I just give them a dark stain and a big coat of polyurethane. Hardwood floors do great in rental properties and they last for a long time. In the kitchen, I'd take out the laminate countertops because those just get beat up over time. I'd put in granite countertops. I'd put in hardware on the kitchen cabinets as it makes the kitchen cabinets wear less. It gets less oil and dirt on the kitchen cabinets because people are actually grabbing the hardware. And then I'd actually put stainless steel appliances in the kitchen because it'd make it look good. I also want to note on the outside of the property, I noticed the roof looks like it's in great shape. It looks newer. And I do notice from just looking at the pictures, it does have a AC or heat pump on the outside, which is great. That means it's got central air, which is a bonus. So my rehab budget on this property would be somewhere around $15 a square foot. So somewhere around $17,500 for that light to medium rehab. Now moving along to the analyzer, which if you want to download our analyzer, look in the description of the video and you can download it for free. But it shows that I have Zillow's rents at $1,500. The comparable sales, it looks like it's listed around the right price. It looks like nicer properties sell a little bit higher, 165, 175. Property taxes are extremely low here, around $610 a year, which is really nice. And then if you move down to the important numbers, cash flow is at 7.94%, so not terrible at all, or 1,064, and that's if you purchase the property all cash. If you levered the property or got a loan on your investment property, those returns go down to 3.63%, which is not that great. $121 a month. So not that great if you actually have a loan of 8.5% on the property. But if you get a lower mortgage rate or refinance out down the road, I'm sure that return would go up drastically. Again, we never like to speculate that interest rates are going to go down, but this one cash flows out the gate even at 8.5%, which is like worst case scenario. So this property does work as a long-term rental. It does not work as a flip. There's not that much equity spread in there, as you can see on the right side of the analyzer. But I give this property a thumbs up. So I give this market a thumbs up. I give the property a thumbs up. That's rare in this day, especially in high interest rates. So I'd say you can invest away in Kansas City, Missouri. Guys, I'll see you next week on another deal day.